Accounting for estimates. Let the builder make detailed comparisons. Controls aren't difficult if the books and records are informative, and cess ratio, then one who doesn't. Even in a small struggling operation, a NIA builder who controls job expenses and costs will have a consistent approach should help you improve the reliability of your estimates. That approach requires intelligent use of all available information, including past performance compared to past estimates. While your estimating system does require consistency, that doesn't mean it has to be complicated or time-consuming. In fact, a good procedure simplifies estimating. Too many builders have no consistent procedure at all. In those cases, profitable contracts are won more by luck than by skill. If you want to produce successful bids, you need the relevant facts and a way to put them together so they make sense. Estimated wage rates and current material prices are important, of course, but they're not nearly enough. You also need the cost records from completed jobs. With good job cost records, you can see very quickly your costs on various types of work. You can analyze the actual costs from past jobs and see where estimates varied from actual costs. The estimate should be detailed enough to provide the information you need to compare to actual expenditures later. One value of a detailed breakdown is that the estimate serves to monitor actual expenses and compare them to the estimate. So estimates can be used the same way forecasts and budgets are used, to regulate and monitor expenditures of job costs, both present and future. In bidding new jobs, as you see specific items going over what they were in past estimates, you can investigate. If the increase is caused by something you can control, that makes all the difference between profit and loss. Job completion schedule. Figure 19%-1 typical job completion schedule. No accounting system in the world is a substitute for an intimate knowledge of your own business. But your accounting records are valuable in estimating for two reasons. One, they're a source of information and guidance in preparing current estimates. Two, they're an aid to organizing bids so that none of the parts are left out. Builders who win bids because they forget to include costs for some part of the job can't expect to prosper. Job completion schedules. The first part of every estimate should be a proposed schedule of job completion. It's the framework for your estimate, which you'll fill in with detailed information and support for your material, labor, and overhead costs. The schedule is in itself an estimate, because no one knows for sure exactly how long a job will take. There are too many uncontrollable variables to pin down an exact completion date, but your cost estimate must be based on a rough estimate of how long the work will take. Once you determine a fair completion time, arrange the phases of the job into a flexible schedule that allows for favorable and unfavorable time variances. This should give you both earliest and latest completion dates. Early completion will often result in higher profits because overhead is allocated at least partly on the length of time required for completion. Figure 19%-1 is a sample job completion schedule. With a plan like this, you can forecast the cash flow, commitments to subcontractors, assignment of labor, and purchase of materials. Since many factors are beyond your control, make sure your schedule allows for reasonable variations in each phase. Some phases of a job overlap one another. Extending the beginning and ending date for each phase of a job may give you a clearer and more realistic schedule. The plan illustrated in Figure 19%-1 is designed to be flexible. Notice that the later phases are longer than the earlier phases. The builder doesn't really expect that plastering will take 3 weeks to complete, but the 3-week bar indicates the period during which plastering must be completed. It's easier to judge the start and finish time for the initial phases of a job. But as time goes on, more variables enter the picture. So the builder has extended the time for later phases to allow for complications in the job schedule. If all goes well, this job could be completed in 12 weeks. If the job is right on schedule at the end of the 9th week, most of the work will be finished already. If there are delays, the completion schedule must be stretched out. The generous completion schedules for plastering and painting allow for those delays. A schedule like this will help you deliver the profits you expect and cuts costs. Your schedule will be more realistic if you review completion times for similar jobs to see where delays have most often occurred. Careful planning will allow for similar delays that are beyond your control. The estimate. Once you develop a job schedule based on the specs, plans, and your familiarity with building requirements, you can begin to estimate the costs. A consistent, well-organized approach is the most likely to succeed. As you make your estimate, remember that the document you're preparing will be used beyond the bidding phase. Many builders just view the estimate as the bait to reel in a contract, but a well-prepared estimate also serves as a control over the job once it's in progress. Comparing estimated to actual costs shows the trend of the project. If costs begin to exceed estimates, you have to work to bring them back in line to preserve your estimated profit. It's a good idea to have both field and office personnel analyze new jobs. Then get regular status reports from your superintendents. You can watch direct costs from the office, but actual progress occurs at the job site. The estimate for each part of the job is made up of various components. These may include materials, labor, subcontracts, equipment use rental, other selling expenses, profit, materials. The builder who starts with an accurate material takeoff and complete job costs from all previous work should have no trouble estimating true material cost. Start by preparing a complete list of materials for each phase of construction. This list documents your material estimate. Don't assume that there will be material losses that require a reserve contingency. Any real losses will be covered by insurance. It's true that building contingencies into your estimate creates a safety cushion, but it also makes it harder to estimate true cost. Too often, builders guess at material costs, assuming that they may have left something out. You should include a contingency to cover unknown conditions, not estimating errors. Add contingency at the end of your estimate just before you add in the profit. Don't clutter your estimate with little guesses that allow for errors. This will help you keep your cost figures clean and precise and make them most useful when you use them later as cost reference data. Labor. Some workers are faster than others, perform better quality work, and make fewer mistakes. Some have a better attitude about their work than others. You should know what subs or crews you'll use when you make your estimate. Many builders who've worked on their own jobs make the mistake of estimating labor based on their own experiences. I could do that work in 14 hours, you might say. But would it be reasonable to estimate 14 hours for the same work to be done by others? Don't count on it. Instead, rely on educated guesses and calculated averages to estimate your labor costs. Some workers could do the work in 14 hours, others would take 18. A mixed crew might be able to finish the job in a different amount of time. You need to estimate a fair time requirement based on an appraisal of your own workforce. This makes labor the single most difficult part of your costs and expenses to estimate. The hourly wage you pay for labor isn't your hourly cost per worker, of course. You must also include payroll taxes, insurance, and employer-paid union benefits. This works out to $26.99 per hour, not simply the base rate of $20 per hour. These percentages are approximate, but taxes, insurance, and benefits will add about 1/3 to your cost. Review your recent payroll analysis records to estimate the hours required to do each phase of the work. Estimate the hours required in the greatest detail possible. The more detailed your analysis, the more accurate your direct labor estimate is likely to be. Subcontracts. Builders often run into cash flow problems because they don't anticipate payments to subcontractors. It's especially important to match the payments you'll receive against payments due your subs. You can't anticipate payments to subs unless you follow progress of the work. In a small organization, this isn't a problem, but larger projects require weekly progress reports. These weekly reports serve many purposes, and one of these is helping you forecast when subcontract payments will be due. Sometimes small operations have to decide between subbing out a specific part of a job or doing the workhouse. Often, when you make the estimate, you don't know what you'll decide to do. It depends on how the rest of the job is progressing, how much other work you have to do at the time, and other variables. If you do the work yourself, your profit is greater. So always have that in mind. However, it may not always be practical. If you're not sure, prepare your estimate as though you'll be using a sub for each part of the job that you might possibly sub out. Then, if you decide later to do the work yourself, that's more profit for you. It's better for you to overestimate than to not plan on subs and end up short. Your payments to others, which include their job markup, will be reduced if you do the work, and you'll have more control over your cash flow. Equipment costs. If you maintain good equipment cost records and know the capability of each piece of equipment, you'll have no trouble estimating equipment costs. Set up a procedure to compute the hourly cost of equipment and keep that cost current. You need to know what your equipment costs to operate, whether the equipment is owned or leased. Control equipment costs with good scheduling to minimize idle time. A realistic estimate of productivity should be based on your own experience on previous jobs. The hourly cost estimated for equipment should allow for idle time, repairs, and maintenance. Other expenses. Some of your other expenses aren't direct costs, but they're usually a percentage of direct costs. You can estimate them fairly precisely. Freight and selling expense, for example, will be a certain percentage of direct labor cost. If your estimate of the direct labor cost is accurate, your estimate of indirect costs should be just as good. Allocating fixed overhead. Overhead costs must be allocated to each estimate you prepare. As discussed previously, the allocation of overhead is never precisely accurate. It's not a good idea to assign overhead expense based on the total price in your estimate, because jobs can produce widely differing yields. Many builders add some fixed percentage to the estimate to cover overhead. But this ignores the fact that some jobs require a heavy commitment of your assets and labor, while others are largely subcontracted and involve a much smaller commitment. A heavy markup on a largely subcontracted job is likely to give the work to your competitors. To get your share of jobs like that, you'll have to add on a much lower overhead burden. The best way to allocate overhead is on the basis of total labor hours. This is true even though there's no perfect way to allocate fixed overhead. No matter how it's analyzed, overhead expense bears no exact relationship to an individual contract, except that it's a very real part of your cost of doing business. Most fixed overhead expenses vary with the cost of labor, either as a result of labor-related factors or for the same reasons that labor varies. Most important direct labor can be identified easily by job. This gives you an easily defined base from which to assign fixed overhead. To allocate fixed overhead by direct labor hours, first use your estimate of the duration of the project. Next, figure what your annual overhead expense will be. You should be fairly certain about how many direct worker hours the job requires. You should also know your annual fixed overhead. The next step requires an approximation. Estimate how many direct worker hours will be spent on all your projects during the next 12 months. Divide this figure by 12 to find the average monthly direct cost for your crews. If the job in question will require 20% of your total direct worker hours, it should carry 20% of your fixed overhead for the time it takes to finish the job. Fixed overhead expenses are more easily estimated than any other cost you have. In most cases, you can project the past year's costs ahead, 1 year fairly easily. While overhead is fixed, it can increase due to raised rents, inflated prices of supplies, higher telephone bills, and so forth. Consider expected increases in these costs. If you expect the contract to run for 12 months, allocate a portion of the next 12 months. Projected fixed overhead expenses. But a contract that will run about 4 months should be allocated its share of the average fixed overhead for a period beginning 4 months before the start and ending 4 months after completion. This should prevent overloading fixed overhead on 1 or 2 jobs during a low volume period. Adjust the overhead to the duration of short jobs, using a month before and after for a 4-week job, 3 months before and after for a 3-month job, and so forth. Estimating total labor hours a year in advance can be difficult because you don't know for sure what your business volume will be. You can't base your estimate on past performance because the total commitments in the next year probably won't be the same as those for the past year. Still, your volume for the past year is usually the best starting point for an estimate of the coming year. Estimate labor for the period of the contract, on the assumption that you'll win the job you're bidding. Then restate this total on an annual basis. To compute labor for a 4-month period, annualize the total by multiplying it by 3. For an 18-month contract, annualize the figure by multiplying total labor hours by 67%. In other words, express total labor hours as though for a 1-year period. If you're estimating that a job will take 15 months to complete, annualize total labor hours with this formula. Annualized labor equal to total labor. Months to complete x 12. For example, let's take a job that will take 15 months to complete. Total labor. 15 equal to average per month. Average per month x 12 equal to annualized labor. Once you've estimated annual labor hours for one contract, you should have no difficulty calculating what your labor hours will be over a shorter term. Consider the contracts in progress, normal changes in activity to be expected during certain seasons of the year, and assume that you'll win this new contract. Your estimate should be fairly accurate unless something unusual happens during the coming year. Once you've annualized labor on the contract you're bidding, you're ready to compute a fair allocation of fixed overhead. 1. Calculate this job's percentage of total annual labor by dividing the job's annualized labor costs by the company's total annual labor cost. 2. Multiply this job's percentage of total by the annual overhead to calculate this job's share of annual overhead. Percentage of total x total annual overhead this job share of annual overhead equal to. 3. Find the monthly average for this job by dividing by 12. 4. Overhead for the total contract is the monthly average multiplied by the number of months for the job. Monthly average x15 equal to this job's total overhead. Final estimate. Figure 19-2, typical final estimate. You now have a formula to calculate the number for each estimate. If you win this job, compare your actual allocated overhead to the estimate. That will help you track your estimated profit on the job. Your estimate summary. Support all totals in your estimate summary with detailed calculations and lists. This lets you identify cost changes as the job progresses, and it gives you a checklist of problem areas to flag for special treatment when you estimate similar jobs. Figure 19-2 shows a sample final estimate that shows enough detail so you can identify specific costs by job phase. Using the methods described in this chapter should require no more time than preparing estimates with other methods. But the method described here should improve your batting average. This is especially true if you do the following. Use past performance to temper present estimates. Schedule the completion of each phase and of the total job. Document each part of the estimate. Control job costs on a regular basis. Avoid adding contingencies without good cause. Establish a methodical procedure for estimating. The next step, controlling costs. Controlling costs begins when the estimate is complete. Once the job is awarded, you must produce the expected profit by controlling the cost projected in the estimate. Your estimate may be the best prepared of all submitted and the best documented, but if you fail to control costs once the job starts, the estimate will be meaningless and the profits non-existent. A well-documented estimate makes control easier because each individual phase of the job has been assigned a budget. You control costs within each phase of construction. This tightens control. When an estimate isn't prepared by job phase, overruns are often hidden until all costs have been tabulated. This rarely works to the builder's advantage. Cost overruns should be stopped as they begin to occur. Looking back at a problem doesn't solve it. Successful builders control their costs during each phase of the work.